Hello and welcome to our Market Alert video for today, which is June 6, 2025. I hope this video is finding you healthy, wealthy, and wise. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And boy, do we have a lot to talk about on this, our weekly Market Alert video. So thank you for watching. First of all, we got the jobs numbers in this morning. So we're going to talk about that. They came in as forecasted, which is kind of unusual. Economists don't always get it right. We're going to talk about inflation, recession, the tariffs. But actually, I don't want to talk about any of that. I just want to talk about Elon and Donald's, whatever that is. I don't know I don't even know what to call it. But more importantly, will that cause a recession? Will that cause a stock market crash? Because you could paint that scenario. So let's dive in. Let's talk about that. So first of all, the jobs numbers did come in this morning, and they were basically where economists and analysts and others thought they would come in. And so the news that they came in exactly as predicted gave people a boost of confidence. I got this. Let's invest. And so as I record this, the market is up quite a bit. And in the past, when investors predict something well and they have confidence, they tend to invest. And so that's kind of a normal behavior that's being exhibited right now. So that's good news. Consumers, they have jobs, they spend, they're 70% of our economy, and that's super important. So that was good. So tariffs. The doom and gloomers have said repeatedly that tariffs are going to cause job losses, they're going to cause inflation, cause recession, and they're terrible. And so far, that has not been the case. So far, the jobs, as I just described, have held, and jobs have held for a while now. And so those are good. Inflation is going down. So far, and the tariffs are in place. We're collecting money, and it's not nothing. We're collecting a lot of money on these tariffs. And inflation's nowhere in sight. In fact, it's going down. And then, any talk about recession right now is nobody's doing that because jobs are holding, the economy's doing well, and there's no inflation so far. So those are all good signs. So tariffs appear not to be all the terrible things that people thought. By the way, I want to encourage you to watch our podcast on tariffs. It is, if I do say so myself, and I do, we talk about how tariffs, what they are, first of all, how do they work? And how does the government collect money? Where does it come from? And then secondly, who pays them? How do people react to them? Are they inflationary or not? Are they recessionary or not? I'll give you some history on that. So I think it's a very interesting podcast, and I think you should watch it. So let's talk about where things could go wrong. And that is if Elon and Donald do not bury the hatchet or at least stop all of this stuff, then it could get nasty. And, they are both very powerful men, and we could see the dampening of enthusiasm in the stock market increase if that were to happen. The other thing also is that Elon Musk could rally the charge against the big, beautiful bill. And if that were the case, and it does not pass, then what we could see is a 68%, this is according to the Trump administration, increase in taxes. And as you guys know, we believe that what drives stock prices is profits. It's how much money companies have after they do their operations. And those profits could be significantly decreased if there was a sharp rise in taxes. And if that's the case, then they will have to pass that on. And many of the small businesses could be very badly affected by all of that. And we could see a very significant adverse reaction in the stock market if, in fact, the big, beautiful bill does not pass. So therefore, that would be something that could cause some consternation. We give that not a very large chance of happening because politically, the Republicans have everything to lose and nothing to gain by not passing the big, beautiful bill. Because if all of that terrible stuff happens, guess whose fault it's going to be? And so politically, the Republicans, we believe, are going to act in their own self-interest, and they will pass it. Now, will it look exactly as it does now? Probably not. There's a sausage-making process that needs to happen. But in the meantime, we think that it's very likely that it will pass. and will be well received, and therefore we think the stock market will have new all-time highs heading into the rest of this year. So from a stock market side, we think we're pretty bullish. Now, on the bond side, which for our clients, we have a pretty good percentage of our money in bonds. Right now, the Fed probably will not be lowering interest rates in the June or July meeting. We've been saying that since the beginning of this year. We think it'll be in the latter part of the year if they even do it. Why? Well, because inflation's at 3%. It's not 2 where they want it, but 3 is not terrible. And we have no clarity right now on will tariffs actually cause these terrible things. It takes time, and maybe they still will. And then, of course, you've got the big, beautiful bill if it passes or doesn't pass. So we got all this stuff still hanging out there, and the economy seems to be okay. Jobs seem to be okay. Inflation's not terrible. So why would the Fed act right now? Probably there's no reason, right? So therefore, we anticipate that if they are going to lower rates, it'll be probably in the fourth quarter of this year, but not sooner. That being the case, bond prices should stay, they go up and down, but they should stay relatively stable. And because interest rates are so high right now, they'll pay a nice dividend, and they're not a bad place to have some money. So overall, we think that on both sides of the coin, things should be okay. But there are possibilities for some bad stuff, which is why we always have, for our clients anyway, what we call our invest and protect strategy, which means that if the stock market goes down to a certain point based on our metrics and based on our proprietary models, that we are headed into a big bad bear, then we want to sell and get out and protect ourselves from that, which is exactly what we did in November of 2007, where our strategy said to sell, and we sold all of our stocks. We got completely out, actually for almost a year and a half. And of course, the market went down almost 60% during the credit crisis. And the same thing happened during the pandemic, where our strategy said to sell, and we did, and protected our clients from what came after that. So we want to, we work with people who are over 50, who are retired or retiring soon. And so for those people, we believe that growth is important, but protection of principal is even more important. If you're going to retire or you want to stay retired, you can't, in our view, afford a large loss in your portfolio. You have to have a strategy to address it. And we do, and we'd certainly love to share how we do that with you. So thank you for watching this video. I hope it finds you healthy, wealthy, and wise. And please like and subscribe. It helps us out tremendously if you would do that. Share it with your friends and family, and I'll look forward to talking to you soon. Retirement